So today we'll be going through an overall market review of the Australian property landscape. I'm going to keep it quite casual. So, just a bit of an update about where each market is at. Western Australia is at the peak of its market, although there are a lot of people saying that it's still got a lot of steam left in it. As a buyer's agency, we have tapped out of WA. I do believe that there will be some strong growth in WA over the next couple of years. But the real question we've needed to ask is, what happens beyond that 2 years? Does the market retract? Does it slow down for a very long period of time? And is it too late to enter that market? And we think it is too late. But everyone has their own preferences. We were buying there quite a few years ago now, so we've extracted as much value as we can from that market. We feel. WA, so that's one of them. Adelaide. Look, Adelaide's been doing well for 8 years. It's been going crazy. A lot of those places have grown over 100% over the last 3 to 4 years. And much like WA, we feel that it's had its growth run. And whilst it still might be moving forward over the next few years, we do feel that it is due for a bit of a retraction or a cooling off. So we've also tapped out of there. And we're trying to target areas that are just about to take off or still early in their growth phase. So next on the list, we'll be touching on Queensland. Now, Queensland does have the Olympics coming up in 2032. So, and we know historically how that sort of worked for Sydney in the past, where it grows up until 2032. So, Queensland might still be an option, although, again, for our clients, we like to target areas that are much earlier on. Queensland has still done, very well over the past few years, and it's getting to a point now where, you could rationalize and say, look, if it's done 80 to 90% over the last 3 years, how much further can it grow? I still think it's still got legs, but we see better value at better price points elsewhere, and hence why we've mostly been focused on regional Victoria, regional New South Wales, Melbourne Metro. Very, very underpriced market now compared to some of those other states I mentioned. And it's really funny because only a few years ago Melbourne was expensive. Everything else has taken off, and now Melbourne's looking pretty affordable. If you can buy, for example, a property for 550 to 600 in metro areas in Melbourne, I think that speaks for itself. There's value there. So we sort of, the way we are looking at the data at the moment, we're seeing that there's opportunity in Melbourne Metro, regional Victoria, regional New South Wales, and parts of Tasmania as well. So Tasmania jumped on our list probably 12 months ago, and we were buying back then. We're already seeing some crazy growth. In fact, I don't think it's been tracked by who's recording, whoever you look at for the data source. I don't think it's being tracked up to date, but we're seeing on the ground, we're seeing what properties are sort of selling for now, and it's extremely, it's grown a lot. We feel it's grown more than what we can see online. So we're being a bit cautious about Tasmania. Of course, not all of Tasmania is great. Some good places to mention: Devonport's not too bad, parts of Launceston, parts of Hobart. Burnie City has some opportunity there, although I would prefer to stick to Hobart, Launceston, and Devonport personally. So yeah, we're just keeping an eye on it. We don't know how long that run will last because the market is so small. Because the Tasmanian market is so small, it only takes a few interstate buyers agents, interstate investors, plus the locals to really push the market up. Whereas Melbourne, you've got so many different suburbs and areas, regions to sort of look at. Some of the stronger performing areas in Melbourne. This is probably a general rule that we're starting to observe, especially moving into 2026. And I think it's got to be related to, how everyone's feeling the pinch financially. It makes a lot of sense. A lot of these more affordable suburbs are really starting to take off and pick up. Even areas that historically aren't that great, they aren't fantastic, they're really, really taking off. The underlying data is strong too. It's just from how people perceive the area, it is not perceived very well. I can give you some examples like Dallas, Coolaroo, Broadmeadows in Melbourne. Proximity to and close to amenities and close to the city, etc. It's fantastic, and from a data perspective, it also stacks up too. It's quite competitive, and we're seeing the prices rise, and it has been rising. Melton West as well, Kurunjang, double-digit growth over the last 12 months out of Melton, LGA. Of course, some of the more blue chip areas as well, like Frankston. I mean, I don't need to tell you about Frankston. Frankston's gone crazy. Carrum Downs, Sydenham in the west. A lot of these places are doing very, very well. Inner Metro is always, I mean, it's doing well as it should, because it's landlocked and it's tightly held, and if you can afford to get into those markets, it wouldn't be a bad idea. But we are seeing again a trend across all the states. The lower price points are being snapped up, and we're also starting to see this filter through to the unit and the townhouse market. So overall, that's a bit of a snapshot. It does change month to month. We are regularly assessing the regions, and there's opportunities across the board. I personally have been preferring to steer more towards the more affordable locations, especially when they're landlocked. I think it presents really good value, and we can only see it go up from there. A lot of, like some of these, for example, some of the areas, just as an example, if you're buying a Dallas, it's really, although we're not buying a whole lot of volume in Dallas, we were maybe 12 and a half months ago. Comparatively to the areas surrounding it, it was very affordable. Now it's actually starting to creep up, but we were buying properties at $500,000 per property, and that one or two suburbs over, they're going for $700-850, and this is the same sort of logic people have been applying to the Frankston region as well. It's obviously at a higher price point, but you've got Frankston. Literally 6 to 12 months ago was, you could buy property at 700, 600. In Frankston North, you can still buy that. You can still buy rundown properties, and even they've gone up dramatically. But it's the same concept there. You've got Frankston, and then you've got all these $1 million plus suburbs just all the way around Frankston. So same philosophy, different price point. There will be some differences in growth projections, but overall, if it makes you 200 grand over the next 2 years, I think it's still a really, really strong play, a really good addition to your portfolio, and the yields are great too. So not just in Melbourne Metro, but we can go out regional as well. I mean, you've heard of Bendigo, you've heard of Ballarat, you've heard of all these spots, and they've already taken off quite strongly over the past few years, so I don't need to tell you that. But there are a few emerging markets, some in the Southern Grampian, some in the Latrobe Valley, that you have to really go down to the suburb level to understand why it's going to grow. Much like Dallas, Coolaroo, Broadmeadows having a bad reputation in Melbourne, certain regional centres also have that same vibe. But at the end of the day, it's not about how we feel, it's not about the emotions, about if it performs and if it grows, and the data's saying it will. So I hope that helps everyone out there. Just a very, very, very large, wide snapshot. If you guys have any other questions, we can just send me a message, send me a question. I'll try and answer it in one of our videos. See you later.